Hey everybody, this is Danelle. Welcome back to Networkchain. Today we're going to talk a little bit more about the macroeconomic environment, particularly given the meeting in Jackson Hole of the Federal Reserve. We heard from Jerome Powell, the Federal Reserve President, and how that could potentially affect markets moving forward, particularly in cryptocurrencies. And as usual, let's go ahead and start off with the cryptocurrency market update. So as you can see here, Bitcoin hasn't moved too much over the past 7 days since we had a drop of over 10% a couple of weeks ago. Bitcoin is now staying at that $26,000 range. It's dipped below here and there a couple of times this past week, but it is now, as you can see, down 0.59% over the last 7 days. We have Ethereum similar, but a little bit more of a drop. It's down 1.75% over the last week, and it is currently trading at $1,654. And then as we go down in the top 10, we see that XRP is in that 52 cent range, and we see Cardano is below 30 cents, still trading at around 26 cents, and is actually down 3% over the past week. We have Dogecoin still hanging in there in the top 10. It's basically a mainstay at this point. It is trading at 6 cents. It's down 1%. Solana has had a little bit more of a drop than everybody else in the top 10. It is down nearly 5%, trading at $20.74. So as I mentioned, the Federal Reserve had their annual summit in Jackson Hole, Wyoming. Every summer they have it towards the end of the summer in August. And this year, everyone was waiting to hear what Jerome Powell had to say with regards to whether or not they're going to continue to raise interest rates, or if he's going to give us a hint as to what they are planning to do when it comes to them trying to continue to fight inflation, because it's still at a higher rate. It's currently at about 4.7% right now, and their goal is to get it down to around 2%. Now, will it actually get down to that point? Still remains to be seen, but they're still continuing to do their tightening. Currently, the credit debt of everyone who is borrowing using credit cards is now over $1 trillion of credit card debt. So that is obviously an issue. We could potentially see a lot more defaults, especially if the interest rate continues to go higher and higher, and it becomes more and more difficult for people to be able to make those payments. We'll read the top line. The Federal Reserve has no plan to take its foot off the gas in its tightening campaign aimed at curbing inflation. The central bank's chairman, Jerome Powell, said Friday morning at the Fed's annual symposium in Jackson Hole, Wyoming. So we'll just go over some of these key facts. Their goal is to bring down inflation to 2%, and they plan to do so. He says the Fed is also prepared to raise interest rates further if appropriate, and the Fed fund rates currently sits at a 22-year high. The war on inflation has a long way to go, even though we have had more favorable recent readings, and stocks were little changed immediately, at least after Powell's speech began, with the Dow Jones, the S&P 500, and the NASDAQ in the green on Friday. And we will be looking to see what happens at the beginning of the week, because sometimes it takes a moment for the market to kind of digest the information and what this could mean for the markets in the future. A lot of times they can price in what they believe to be the future several months ahead. So we will be seeing what's going to happen in the market over the next several weeks, over the next several months, particularly since last year when he was very what they call hawkish, when he basically said we're going to have a difficult year. They plan on continuing to tighten. The market dropped tremendously, and we saw a bottom at around that October-November timeframe of 2022. And then since, we've been going up a little bit, because we all believe in the market, at least for the time being, that there's going to be a period in time where they're going to have to stop the tightening and then at some point start to cut back rates. But as of right now, we have no indication from the Federal Reserve Chairman that they're going to be cutting back rates, that they're actually going to continue to tighten. So we shall see what happens with the market, particularly over the next several days, and then going into the next couple of months, to see if we see a bit more of a drop that we had from last year. So we shall see what the market how the market responds, I should say, given what he has said in this Jackson Hole summit. But we will find out a little bit more in terms of what they actually decide to do going into September. I believe it's around September 19th or 20th is when we will find out whether or not they will raise this next month, and if they're going to continue to raise moving forward. I also want to go into just a little bit of what's happening with Bitcoin, generally speaking. Going back to the market, cryptocurrency is still definitely in a bear market. As we can see, Bitcoin is still down since its drop of over 10% a couple of weeks ago. And if we go to year to date, the Bitcoin price has been staying above 20,000, and it looks like we're kind of hovering around that 25 to $26,000 range right now. I just saw a video recently where a trader was predicting that there's a possibility we could definitely get back to this $15,000 range, and potentially we could go down below 9,000. So you definitely want to be prepared, particularly if we continue to see more tightening from the Federal Reserve, that there's a possibility that Bitcoin and some of the other cryptocurrencies could continue to retrace back to where they were when we had those lows in the latter part of 2022. And if we go to the chart, we are still far away from the all-time highs when we reached around, depending on the exchange, anywhere from 64 to 69,000. We're definitely well over 50 to 60% down from those all-time highs. So we're definitely still in a bear market. Could this be an accumulation phase? It looks like there is some accumulation that has continued to happen over the past year and a half, but is there a possibility that we can get back to these lows right here in March of 2020? We got down to a low of around $3,000 to $4,000, depending on the exchange and their rates at that particular exchange. But there was a huge dip, and it was definitely below that $5,000 range. So could we get back to this accumulation range in that $9,000 to $10,000? It's not out of the realm of possibility, particularly when it comes to cryptocurrencies. As you can see, it's very volatile. We have huge swings where we went from nearly $10,000 all the way up to $60,000 in less than a year. So it's definitely possible that we could see that swing down, as well as we saw that it did happen from November of 2021 down to the lows of December of 2022 and the beginning of 2023. So just be mindful, especially if you're considering investing in cryptocurrency. We still have a long way to go. We're still very early on. Bitcoin is still only 14 years old, so we have a lot of room to grow, but we definitely want to consider what's going on in the macroeconomic environment, because it does make a difference in what could potentially happen with the price of Bitcoin and a lot of other cryptocurrencies. So we're going to go ahead and end with a cool note in the NFT space. NFTs are also down bad, but we did find out about a collaboration, another powerhouse collaboration between Crocs, which are the well-known shoes, and they are collabing with Doodles, which is a NFT project that did very well in 2021, and they are known for its colorful style. And as you can see here, this is a rendering of what the Doodles slash Crocs collab is going to look like. And Crocs are also known for these pins that you can buy and you can place them onto your Crocs. So we have a couple of these pins of the Doodles images from the NFT PFP project that came out in 2021. So as you can see here, the CEO of Doodles is beyond excited to announce their collaboration with Crocs. Partnerships rarely get more organic than this one. Our unique style and characters lend themselves so well to the Crocs brand and footwear. So Doodles, they also have a chief brand officer in Pharrell Williams, the super music producer. So he plans to continue to bring some creativity to the Doodles brand. And they also received a ton of money in the bear market. Let's go here. This is their website. You can learn a little bit more about Doodles at web3.doodles.app to learn a little bit more about the NFT project and what they have going on. They plan to be an entertainment studio, including a potential animated series, as well as they're going to have more digital wearables that are going to be available in the metaverse eventually. So they definitely have some plans, but even in the bear market, if we go here to their X profile in September of 2022, which was definitely towards the bottom of the bear market, particularly in NFTs, they were able to raise $54 million at a $704 million valuation. So I'm sure that valuation is not quite what it is at that time, or maybe it is, or at least it's at the end of the day, it's what investors are willing to consider it to be. And right now, they have been able to raise $54 million on top of the money that they've received in bringing out their NFT project. So they still have a lot of runway, I should say, to be able to hopefully bring more of the masses into NFTs and understanding what they are with digital assets. And this partnership with the Crocs label, I'm sure, is going to go a long way with the Doodles brand. So we just wanted to keep you posted on what's going on in the cryptocurrency space. You can always check us out on X as well as Instagram. We post there nearly every day. And of course, we will continue to keep you posted with our weekly videos here on YouTube. Thank you so much for your support. We look forward to connecting with you soon on the network chain. In the meantime, take care. Bye-bye.